Hello everyone. Today we are going to start with the new head, that is profit and gains from business and profession. This is the next head which you have to cover under income tax. So in the previous lectures in the class we have done income under the head salaries, income under the head house property. So our next head is profit and gains from business and profession, right? So to start with, as we know that each and every head has its own charging section. So profit and gains from business and profession, I'll use the short form, that is PGBP every time. So it has the section number 28. Okay, so this is the charging section. So which incomes, first of all, we need to know are covered under the head PGBP. The first is any profit and gain from business and profession. If you are doing any sort of business or any sort of profession, whatever income you earn from both of them is to be included under this head, right? Now from business means it can be any money that is illegal business or legal business. The income tax authorities do not have to do anything with it. Business means business, right? And profession means if you're not doing job under someone, that will be covered under the head salaries, right? If doctors are working in hospitals, so they are serving somewhere, so they are under the head salaries, they will be covered under the head salaries, those are employees. But if the doctor has its own clinic, so that is the profession, right? So lawyers can be included, CAs can be included, doctors can be included, those who run their own coaching institutes are also covered under the head profession itself. So any money that is made from business or profession is covered under this head, right? Now second is profit or sale from import entitlement license. Now what happens is sometimes the companies or some manufacturing units make their goods, and what they do is they export their products to other countries, and sometimes it may happen that they may get the import license also. That means the company or the government may tell them that you can get the benefit of import entitlement. That means if supposingly the government says that okay, up till 20 crore if you import something, you will not have to pay much of the taxes, right? Now if it happens that some company is not in need of this import entitlement license, this license can be sold by the company to someone else. अगर उसको ज़रूरत नहीं है, if the person is not in need of this license, so this license can be sold to someone else. So whatever money that person gets from this import entitlement license, by sale of this license, whatever money the person is getting is to be included under the head PGBP, right? Third is cash compensatory support or duty drawback. Now to understand this, let us just take a help of an example. Now this cash compensatory support is basically given to those units which are EOUs, that means export oriented units. Okay, now supposingly if the person has got something goods from other countries, or if he has made certain kind of product and he is going to export those products to other countries, and supposingly the cost is rupees 100 and somehow he is able to sell only at rupees 90, right? So in this case this 10 rupees is his loss. Now this loss, in order to promote exports, because we know whenever there will be exports, there will be foreign direct investment in the country, there will be generation of foreign currency in the country. Okay, so to promote this foreign currency, or to promote the exports, even if the companies are incurring some sort of losses, those losses are compensated by the government. Okay, so any money that is being compensated by the government, that means some sort of benefit is being given to those export houses. So whatever benefit is being derived, that will be taxable under the head what? PGBP. Okay, so the second word we study is what? Duty drawback. Now to understand duty drawback, let us just take another example. For example, if any company has bought raw material from foreign country, and upon that the company has paid some sort of import duty upon it. So what is the total cost now? If the company is importing for rupees 100 and the company has paid 10 rupees as import duty, so total costing is what? 110 rupees, right? Now this 10 rupee which the import duty has been paid by the company, it is actually refunded by the government. again in order to to support these organizations, right? So whatever the amount will be refunded will be again chargeable under the head what? PGBP. Okay, so this was the case of what? Cash compensatory support or duty drawback. Now next is amount received under key man insurance scheme. Now in every company there is a person on whom the whole working of the organization depends. Now supposingly in Reliance industry the key man or the main person is who? Mr. Mukesh Ambani, right? So what happens is if Mukesh Ambani somehow is no more or is critically ill, the company will not be able to run as it should run. Okay, now in order to meet those circumstances that in case something happens to the key man, the main man of the organization, the insurance of that person is being done. Now on the maturity or any mishappening to that person, whenever the company gets the insurance value on that particular time, that value will be taxable under the head PGBP. Fine. Next is gifts, perquisites, other benefits received in course of business or profession. Now, supposingly there, there are many motivational speakers right now. That is their profession, and many of the organization calls them in order to deliver certain speech in their organization or in any of their get-together. Now, what happens is whenever the person gives certain kind of visit, he will be paid certain kind of remuneration. Now, this is the profession which the person is doing as a motivational speaker, and whatever the amount he is going to receive from that person is obviously going to be taxed under the head PGBP. But along with it, if supposedly the company has also reserved his business class tickets or any air tickets, and he has also given the facilities that this person is going to stay in hotel, those facilities also will also be included in the income of the person itself. That means along with the remuneration which he is going to receive when he is going to deliver certain kind of speech as a motivational speaker, along with it whatever monetary benefit or whatever gifts or whatever perquisites will be given will also be taxed under the head PGBP itself. Okay. Now next is remuneration, interest, salary, commission received by the partner from partnership firm. Now what happens is in a partnership firm, whenever a partnership firm earns profit, now supposingly if I am talking of some partnership, that partnership has earned profit of rupees 1 lakh. Now out of this 1 lakh, the company has to pay to its partners as a remuneration. Okay, now supposingly this 40,000 has been paid out of this 1 lakh. Okay, now in order the partnership firm can get a certain kind of benefit from it, that means this 40,000 which has been shown as remuneration to the partners is allowed as deduction to the firm. That means what happens is this can be shown under that this can be treated as an expense, and the taxable profit ultimately reduces to rupees 60,000 for the firm. Now another thing has to be taken care of, that whenever any partner is going to receive this remuneration, now obviously the company is not going to pay upon this profit, upon this part, the company is going to pay tax upon 60,000. Okay, the 40,000 has been given to the partners. Now when the partner is receiving this profit, rupees 40,000, this will be taxable in the hands of partner as PGBP income. That means the partner as an individual will show this income that he has received from a partnership firm. But the firm will pay the tax upon 60,000 but not the profit of 1 lakh. So this is allowed as deduction. Okay, but on the other hand, the partner has to pay the tax on the 40,000 which is received as remuneration. Okay, now coming back to the points. So next is non-compete fees. Now what happens is, now supposingly if I take any hypothetical example, supposingly I say that okay, Airtel is the one who gives the cellular network services of cellular networking in India. Okay, now he wants that Jio or Vodafone or any other company should not come into competition. because he knows that they are good players, and if they come into market, if they come into competition, his profit is going to hamper. Who's? Airtel's. Okay. Now what Airtel does, he asks Jio and other competing firms not to do this business for say for coming 10 to 15 years, because Airtel only wants to be the major player in the market. Okay. Now no person is going to sit free for free of cost. If any person, if Vodafone says that no, I want to be in market, I also want to do some business, I also want to earn certain kind of profit. Okay. Now what Airtel does, Airtel gives certain kind of monetary benefit to these companies annually. Supposingly, in order to curb this competition, the Airtel is going to give say rupees 1 lakh crore or 1000 crore to say Jio and to say Jio and this Vodafone company, so that they do not come to the competition. So this non-competing fees which the Jio or any other company has received will also be treated as PGBP income, because they have been deprived of doing a business. If they were given a chance of to do a business, they would have gained profit. Okay. Now they are not given a chance to do a business, so any amount which is being received as non-compete fees will be treated under the head PGBP. Next is income derived by a trade profession or similar association. Now supposingly there are certain associations such as ICAI, where all the CAs come together and they form a part of ICAI Institute. Okay. Now in this organization, the organization charges certain kind of fee from them, say supposingly 2000, 3000 per annum fees. Okay. Now this fees which is being given, which is being taken, and in lieu of this fees, some services are being provided. That means some kind of conferences or some kind of meetings or some kind of, you say, meetings are being done. So in order to provide, or seminars are being conducted, in order to provide such services, the money which is being taken annually is treated as PGBP income of these associations. Okay. Now fair market value, FMV, is what? Fair market value of inventory as on the date on which it is converted into capital asset. It simply means that supposingly if I am a builder and I have I do the work of what? Constructing buildings, and I have 2-3 buildings and I have created certain floors upon those buildings. Okay. Now supposingly these floors, when it is my business, so these floors are actually my stock. Okay. And sometimes it may happen that I tend to convert one of these stock into my residential purpose. This stock was for the purpose of selling to other people, but one of these floors I have taken myself for my residential purpose. Okay. The government says if you have converted such stock into your own asset, then the fair market value on that day, supposedly the day on which I converted into my capital asset, the floor costed rupees 2 crores. So 2 crores will be shown as my sales under P&L account, and it will be shown as my income, and it will be charged under the head PGBP. Okay. Last is any compensation or other payment due received. It simply means that supposingly, for example, if I have my publication, if I write books and from some publication house, I want that that publication house should publish my books for coming 5 years. But due to certain reasons, that publication house does not publish my books, and before 5 years the contract is terminated. Okay. So whatever amount I will ask for certain kind of compensation from them. So whatever amount I am going to receive as compensation from that publishing house is going to be my PGBP income. And it can go other way around also. If I promise to a certain publication house that for coming 5 years I will get my books published from a certain publication house itself, but after say 2-3 years my mind changes and I get my books published from other publication house, so I need to compensate them. So whatever money they are going to receive is going to be their PGBP income. So these are the incomes which you need to cover under the head PGBP. The rest of the lectures we will cover in next videos. Thank you.